at A4G, we're quite excited about what technology is bringing, not just to our industry, but to the business industry. In our experience, normally business software with a good accounting back end is bespoke software and it's very expensive. I'd say what Xero seem to have achieved with their software and allowing quite an open back end for any business to develop an add-on is to actually make sort of bespoke software a lot more affordable for businesses. So I'm going to cover just a bit about the aspects of a finance team and what they get involved with on a day-to-day basis. I mean, many of you will know, you find that there's a lot of basic input in. So the entering of your sales invoices, quite often sales invoices are done on a different package or on Word, and then they're uploaded into your accounts package. And normally that is manual entering. And again, with purchase invoices, it's someone's job to receive the purchase invoice, check it, approve it, and get it on your system. And then there's the bank activity. They have to wade through the bank statement, enter in all the receipts that have come into the bank and where they should be allocated. And again, the same with the purchases. So it's quite a significant workload really in the basic inputting. And then they often get involved in filing. Now this type of work requires a good admin person and equates to 70% of the work. But actually a lot of it can now be automated. And in our experience, actually, you tend to end up overpaying slightly for the basic inputting work because of you need your finance person to have slightly higher skills as well. But as your business grows, it's the basic inputting side of it that seems to get a bit out of control. So then they move on to the basic controls. Now, obviously, all the basic inputting needs to have been done for them to achieve this. And the basic controls would be making sure that your bank account on your accounts package reconciles to your bank statement and that nothing's been missed. They'd be looking at what money you're owed and that's up to date and correct, what you're owed or what you owe to other people and trying to plan for those payments. And then they'd also have to make sure that things like your wages bill was all on the system on a weekly or monthly basis, and then checking and completing your VAT returns. But none of that can obviously be done before the basic inputting's all up to date. And this level of work really requires a reliable bookkeeper. You need someone that sort of understands those reports a little bit better. But it's about 20% of the work that goes on within your team. And then you'd be looking at the advanced controls. Now, this is the type of information that's really necessary for accurate management accounts and is quite often the bit that probably for you as business owners is a bit ad hoc for the information you get. And it includes adjustments for things like stock, work in progress and income in advance. Now obviously those adjustments, depending on what industry you're in, can be of real significance on a monthly basis. You spend a lot of money on materials that are actually due for the next month of work. If they're showing in the current month, you're probably looking at figures that are showing you're making a huge loss that month, whereas actually they just need to be moved into the month that you're going to use them. But actually without doing those adjustments, it's very hard for you to look at your figures and see whether you are making a profit or loss. And the same with income in advance. For anyone that's on a subscription basis or maybe maintenance contracts, if you're paid in advance of work, you've really got to try and match that to when you're having the spend on that activity. Now that type of work requires a good bookkeeper and is quite often some of the things we get involved in training our clients' finance team, or an OK management accountant. But it's probably only about 5% of the work, but just does need to be done on that monthly basis so that you're being given the figures that you need to make some decisions on. Now, quite often, in our experience, the finance team get dragged into all sorts of other responsibilities. So they'll deal with supplier payments, often employee expenses, probably nagging you guys for your expenses. And actually with Xero, one of the good features of that is the director's expenses, how you can simply take pictures on your mobile and get your expenses done without too much hassle. They also get the fun job of liaising with us as accountants, which I'm sure is their most favourite. And then they tend to get dragged into a bit of HR, so they're quite often, not only do they end up running the payroll, but they probably deal with the grumbles about is their pay right, they deal with sickness, holiday and overtime. So, and quite often managing your office, they end up as a bit of an office manager. But also they're quite involved in credit control. So the credit control, they would have to deal with customers on arranging payment plans and bad debt management. And as we said, actually, with some of the software now, there's a really wonderful way to automate some of these processes. You know, the basic chasing, by the way, our invoice is now 30 days, could you please pay us? And some of that goes out as an automatic email from that credit controller. And they can often be in a meeting and walk out after that's all been automated to money in the bank account and some apologies from your customers to say, sorry, we were late in paying. So it means they get to focus on the important stuff. Now, one of the big parts of a finance department, and probably the most significant part for you as a business owner, is actually the interpretation of those numbers. So at most, it's probably 5% of the work, but it does require a good management accountant who knows how to look in detail at those figures. Or you guys as owners being able to have the time to really delve into some of those numbers, or what we refer to as a virtual FD, which is certainly where we think our industry is going. As a practice, we're quite excited about that. There'll be a lot of accountants that are really not keen to do that, but at A4G we're really excited about being a bit more interactive with our clients. And often the answers to the types of things that they need to look at, it needs a little bit more digging and investigation. So we really need to look at, you know, why things are happening and the reason for that. So as business owners, where do you start? Now, quite often, your management accountant is too busy. The business has grown since they've been there. They are caught up in trying to keep up to date with the basic inputting. You maybe don't know exactly, you're not getting exactly the right answers. Maybe you feel you're being a bit fobbed off, sometimes because they're too busy, or that where they are slightly more qualified than you in finance, you might feel a bit awkward asking them the questions that you feel you need to ask. And you might struggle to manage your finance team without causing offence. I know this is probably one of the biggest things we get involved with our owner managers is, you know, that actually asking questions about your numbers is no criticism of your finance team. You just want to understand why your gut feeling about how the business is doing isn't matching up to the numbers you're being given. So quite often we get involved with clients in looking at the roles and responsibilities of the finance team, which is actually really interesting. It gives us a real good opportunity to have a fresh look at the processes that are being done in the business, if there's advances in technology that can improve those, and just you to have a really good documented understanding of what they do on a daily, weekly, monthly and annual basis for your company, and then look at whether that's the best use of their time or the most value for their hourly rate. I mean, quite often businesses have a sort of an admin person that actually is a little bit light on workload, so some things can be shifted around a little bit, but without you knowing that as an owner manager, it's always quite hard to have those conversations, and we do appreciate that. So what does or should a really good FD be doing for you? They should be doing forecasting. They should be looking at your short and medium term cash flow forecasting. They should be looking at your expected profit and certainly accruing your tax. They should be helping you with your sales targets. You know, are you working with your sales team? Have your sales team come up with some targets with your help, but actually the finance team don't necessarily know about those? And actually, if they don't know about those, they can't then look at the staffing forecast for your business and whether you've got enough resources to fulfil that potential new business. They can help you look at growth opportunities within your business by really understanding which area of the work you do or the products you supply is the most profitable and how you focus your attention on that. But also they'd look to prepare budgets and maybe talk to the members of your team who are responsible for managing those budgets and really hold them accountable. And then, as I said, they'd look at the staffing levels. Now, one of the big things your finance team will do is your cash flow management. And actually, this is often where there can be a bit of conflict sometimes. I think the finance managers, I certainly know a few of mine, treat the money in the bank account like their money. Can be a little bit protective sometimes. So I know for you owner managers, it can sometimes be a bit of a struggle taking any money out of the business. But they do manage the day-to-day payments. They would look at negotiating payment plans. And really a big part of their role needs to be about reducing the cash lockup. So really assessing your billing process. Is there any way that you can raise that invoice a little bit earlier and making sure it's a very smooth process? As Joe talked about, the online invoicing actually allows you a really good tracker so you can see that your customers have read your invoice. So, you know, this whole requesting other copies because it didn't arrive in the post or the post delaying your invoices getting there, you know, this stuff's instant now. Also looking at your debtor days. They'd be looking at extending your supply credit terms, maybe reducing your interest charges in that regard, and obviously keeping the buffer in the bank. But they also ought to be planning for your VAT and your corporation tax, so really getting a good handle on some of your slightly longer term cash flow needs. And saving for some of your big expenditure, or taking into account seasonality of your business. And obviously, their most important job is ensuring the owner managers get paid. So at A4G, we've got a really handy little tool, quite a few of our clients now use on a monthly basis, and it gives you a really good idea of sort of cash flow trends. And it's very quick and easy to do. So you would look at the money in your bank account, then the money in your deposit accounts, and then take into account your overdraft limit. And that gives you your total cash available at any point in time. Then you would look at accruing for any big liabilities. So for your corporation tax here, you've got a £17,000 corporation tax bill, you've got 12 months before it's due, you're actually 9 months into that. You've got 9 months to go, so you've got 3 months you should have had set aside, which is your £4,000. So if you do that for some of your other big expenses, you can actually see that really, at the moment, you should have 28,500 kind of stored away for those bigger liabilities, and it's actually predicting a shortfall. Now, you might be quite comfortable with that because actually you've been through a bit of a downturn in trade, or seasonally you're always low on cash flow at this time of year, but actually it's important that you know that trend, and that actually the nearer these deadlines get for payment, that this figure isn't getting worse. And I actually know someone that has sacked 2 credit controllers on the basis of this information, because it gives them a really easy way to be able to manage cash flow in the business and identify problems early on. So if anyone is interested in our cash flow tool, please let us know and we can get that over to you. They also get to work with your bank, working with your bank manager, managing your overdraft and your loan payments, making sure you're not getting slapped on the wrist or any defaults. But they'd also look at making sure the finances stack up. So, for anyone that's invoice financing, you've got criteria to submit accounts on a regular basis to your bank manager, and certain ratios, about profitability and interest calculations. It's their job to manage that and to kind of highlight any issues that are coming. But they might also help you look at financing assets, whether it's best to finance them over a period or buy things outright, and help you identify any additional funding that the business might require. So comparisons is a big thing. We always recommend that our owner managers look at, particularly profit and loss comparisons. One of my favourite is actually the monthly comparison, but it actually would compare this October to last October, which I think again helps you look at the seasonality of your business and just see that you're growing at the right level that you want to, or if there's anything to be concerned about. They should actually be looking against your forecasts. So there's some easy ways that you can set up your forecasts in your accounting system and do some variance analysis on that. But they'd be looking at your break-even. Now, one of the key things we tend to identify with our clients about break-even point is actually, if you're a tax-efficient owner-manager, you're all on a very poor salary, and actually you take a lot of your money as dividends. Well, to actually have a true reflection in your break-even calculation, not only do you need to include the dividends that you draw as part of that break-even, but also the corporation tax the company would pay as part of that. And for a lot of our owner managers, what they draw, they like to think of as net of all taxes, so including personal taxes. So again, if that's the way you like to manage things, that personal higher rate tax for any of you ought to also be built into that calculation. So it's very important that the important numbers go into that and that it's reported on monthly. Now, one of the things that is brilliant with the accounting software that's out there is you really can look at breaking down your finances per department, per project, per product line, and really looking at each area of your business. And then you'd have some of your key performance indicators, so whatever you feel is important. If you want to monitor gross profit or your net profit or the number of repeat orders from your customers, that's important to look at on a monthly basis. And then they might monitor your staff incentives and their targets. And one of the things we do quite a lot with some of our clients who are interested is benchmarking to competitors. it's quite interesting to know as a business what you're doing better, because you've actually got to protect that, and also some areas for improvement. So I would always recommend looking at that every few years just to see where you are, and it just gives you a bit of information on your industry. So they'd also look at cost reduction. Approving kind of budgets with departments is a good start, getting everyone's buy-in into what they aren't allowed to spend, but also looking at kind of unnecessary costs, replacing things for the sake of it. Quite often too many printers on people's desks. I think there's all sorts of things. I mean, quite often stationery can be quite wasteful within businesses. People don't necessarily quite look in the cupboard properly before they order a load of envelopes. And just making sure that every bit that you're spending is important to the business. One of the key things I would always recommend is actually some of the things that look slightly odd on the profit and loss need investigation, because in our experience, if something doesn't feel right, sometimes there can be something a little bit untoward in those numbers. And also, cost reduction, they'd look at things with your suppliers, making sure you're getting maybe discounts. Some clients work with their suppliers on sort of a purchasing rebate effectively for the level of spend that you're doing with them, but it's just ensuring that they've got the time to touch base with your suppliers on a regular basis to make sure you are getting the best prices available for you. Now, as a finance director, them and yourselves are the best people to be looking at pricing. So they'd be looking at working with your sales team on forecasting and how that falls into the planning, looking at the resources for the business placed on that forecast, analysing the margins for each type of sale, and looking at the product mix with you, and really looking at the true cost of every sale. So looking at the marketing that goes into that, any of the postage, any of the things that make up the credit control time that it's taken to be paid by certain customers. It's really important to look at the true cost to your business for each activity that you do. And then they should be able to help break down for you and give you a very easy summary of how that mix contributes to your gross profit, and then so what contribution it has to your overheads. And also, I know sales is a bit of a dirty word, but if an FD's got time, they should be looking at how they can build sales or education of clients, I like to refer to it as, into each part of your process that you're doing. Now, your key performance indicators. Quite often, we see people that have key performance indicators given to them, and it might just be gross profit, net profit, and they may be the only kind of indications you're given on a monthly basis. In my opinion, key performance indicators ought to change depending on what your level of importance is at any one time. So you may be focused on growth, so you may be looking at the number of new customers, the repeat business, and the growth in sales. That may be actually what you want to focus on. I wouldn't recommend too many KPIs, probably a handful to give you some really easy numbers to help point you in the right direction. So here's just some examples of the type of things that are looked at. So it might be that you're really interested in how quickly your bills are raised, staff retention if you're in a service industry, that's quite an important number. But just to give you a bit of an idea of some of the key numbers that you should be getting. And then looking at processes and efficiencies. So they should be helping you to look at some of the key processes and actually driving down the cost of some of those areas. And helping you free up your high level resource. I mean, I think for the most common kind of discussion I would say that I tend to have at the pre-year meetings with my clients is that actually sometimes it's really hard to recruit at that higher level. There's a bit of a bidding war sometimes for those senior people. So actually looking at the processes and seeing what you can drive down enables you to look at what you can free up in terms of a higher level resource. And then look at documenting those systems, because actually if some of those high level people can document some of what they do, they can pass it down to an assistant role and then just oversee the more important bits for you. So again, as I said, I would oversee some systems changes. One of the things we often get dragged in to do is a bit of a health check on certain areas or some internal audit type work. So if you've got a particular concern about VAT or payroll or cost audit, you feel that there's a certain level of expenses that just don't seem right, we can come in and do a bit of an internal audit and health check for you. So really, without some of these missing pieces, we appreciate that as owner managers, you don't necessarily have the confidence to always take the next step, or certainly not at the speed you'd like to. Sometimes you can make wrong decisions along the way. I mean, in our experience, particularly underperforming areas or people sometimes not addressed quick enough. And good members of staff can sometimes be undervalued, which can lead to them, leaving, which is something that you're not, as a business, you're keen to retain your good staff. And in every case of fraud we've ever dealt with, it is always because the management information is not up to date. And the owner managers aren't getting to see good, accurate numbers that they can dig into. So as they say, information is power, but only really if it's reliable, accurate, relevant and timely. And actually, it should be yours with a good FD. You shouldn't be left in the dark. So what most of you might be interested in is, for owner managers, how much would an FD cost? Well, in the marketplace, if you were to recruit a full-time FD, you're looking anywhere from £60,000 to £100,000, which for most of you is not what you need. There's also the hidden costs of training, recruitment fees, which is anywhere from sort of 10 to 20% of the first year's salary. Then you might have a benefits package. But I think most importantly, it's how long it takes to bed a good person in. I mean, with most employees, it's kind of 6 months of investment before you're really getting good value for money out of that new recruit. And at that sort of level, that's expensive. And then there's the trust. Obviously, you're trusting them with the finances of your business. And that can be very hard sometimes to hand it over.